If you bought your home with less than 20% down, you're probably paying PMI, private mortgage insurance. But that doesn't have to last forever. So how do you get rid of private mortgage insurance? Let's break it down together. PMI is actually great. It allows you to move forward with a home purchase without having to wait until you've saved up 20% down, which can take quite a while. And all the while you're saving, home prices are going up. So PMI allows you to move into home ownership sooner rather than waiting for that 20% down. It also protects the lender in case of default. If you're putting only 3% down and unfortunately have to go through the foreclosure process, there's just no money there for the lender to recover. So the PMI also protects the lender. It's rare for foreclosures to happen, but it's there to ensure the lender as well. So how do we get rid of this private mortgage insurance? Well, there are a couple of different ways. As you make your monthly payments, once you get the loan balance down to 80% of what you purchased the home for, you can ask the lender to remove the mortgage insurance. That's one way. The mortgage insurance will automatically cancel off your loan once you've reached 78% of the loan value. So the difference between those two is at 80%, you can request it to be removed. At 78%, it is automatically canceled off and you don't have to do anything. There's a third option as well, and that is between your payments that are slowly paying the balance down and property values appreciating and going up, you might reach that 20% equity position sooner than the schedule for the PMI to drop off. In that case, if you feel that you've reached more than 20% equity, you can reach out to your lender and ask them to do a revaluation of your property to see where the new appraised value lands and if you've reached that 20+%, and they can then drop the mortgage insurance. If you've reached that 20% based on your new appraised value, then the lender can drop the mortgage insurance off your loan. If you have an FHA loan, the mortgage insurance on FHA loans works differently. If you're putting less than 10% down payment on an FHA loan, you will have monthly mortgage insurance on your FHA loan for the entire life of that loan, unless you refinance into a conventional loan at some point. So FHA does work a little bit differently. It has two types of mortgage insurance. There's an upfront mortgage insurance fee that gets wrapped into the mortgage, and then also the monthly mortgage insurance. So if you put less than 10% down on an FHA loan, you will still have that monthly mortgage insurance for as long as you carry that loan. Eliminating PMI can save you hundreds and sometimes even thousands of dollars a year. If you have a question about your mortgage insurance and want to know how you can put a plan together to get that release from your mortgage, give us a call. We would be happy to work with you on that and come up with a plan together. I'm Barb Multari with Pathway Mortgage Group, and my team and I have helped over 3,200 home buyers purchase homes, and we would love the opportunity to help you with yours.